So let's just say, guys, things are not looking so hot for Palantir stock right now and the entire stock market. Everything's in the red, so we have a lot to break down. Palantir, the charts, what I'm doing, and why the overall stock market is dropping. So hit the like button, make sure to subscribe, and join the free email stock newsletter, and check out my Patreon for all my portfolio updates. Those are down below. And with that being said, cheers. Let's dive into it. So it's currently about 3:35 p.m. East Coast time, so we're pretty much a little bit over halfway through power hour right now, and all the indexes, like I said, are in the red, and Palantir is down about 3.5%, and it looks like here the Dow's now down 1.8%, the S&P's down 1.5%, Russell's down 2.6%, and QQQ's down 1.3%, as the VIX is back over 20 points. The VIX was under 20. It was in the teens, I think, for a couple of days, and now we're up 12% on the day. Again, we're up back over 20 points on the VIX, and this has to do with the bond market, which we'll talk about here in a minute. But first, let me show you Palantir, kind of the charts here, what's going on. So pretty much, guys, what is going on is the downtrend, quote unquote, from the last couple of days is continuing. Obviously, if we pull up the 4-hour chart, we're nowhere near downtrending. When in doubt, zoom out, right? But over the last couple of days, yeah, we've been downtrending, selling off a little bit. If I get the channel tool out and show you all what I'm seeing here on this 30-minute time frame, you'll see, okay, we've been making lower lows, lower highs pretty much for a week, right? Looks like last Thursday, or what's today, Wednesday? Last Wednesday, we hit all-time highs, $133 a share. Now we're at 121. So over the last week of trading, we've been in this channel, which is continuing as of today, right? And as of this video, we're actually at the bottom of this channel. You guys see, trading at about 121 now. We hit 119 earlier today. So what is going to happen here? Do we get a recovery rally tomorrow? Maybe the next day, do we start breaking back out towards the top of this channel? Will we then break out of that and start fully breaking out again? These are the questions going through my head right now. And I do think there is a decent chance we do recover in the short term. We rally back to the top of this channel, maybe back towards the mid 120s, and then we'll see where it goes from there. But as of now, that's what we're dealing with on this 30-minute chart. On the 1-hour chart, you guys are seeing pretty much exactly what I just said, but a bit more stretched out here. And on the 4-hour time frame, of course, the bulls are still in charge. I mean, look, we're just 1 week post hitting all-time highs. Bulls are still in charge, right? We're just simply cooling off a bit here, selling off down towards, it looks like maybe, just maybe, we're going down to the 180 SMA here on Palantir on the 4-hour chart, which could put it anywhere from 110 to 115. That's a big support that we're noticing here, which, if I get the circle tool out, you'll be able to see it, right? You're noticing we're approaching that. So Palantir was actually up earlier in the day, guys. So were a lot of stocks out there, but things turned for the worse about 2-3 hours ago. You can see here Palantir actually hit almost 120. Actually, no, it did hit over $127 a share. Then we dumped off at about 1:30 p.m. East Coast time. So let's go over now why the overall stock market is selling off. Not every stock selling off. There is a little bit of green here. Google is green. We covered that earlier thanks to Waymo. Make sure you guys go check out my last video. We covered that. But other than Google and a handful of other stocks, we're down pretty much across the board. And you can thank, again, like I said in the intro, the bond market for that. So we can see the headline here. It says Dow tumbles 800 points as Treasury yields continue to push higher. More and more people are just dumping bonds, guys. It looks like after this, the downgrade from Moody's, they were the last credit agency putting U.S. debt at AAA in terms of the credit rating. Now it's AAI or AA1 or whatever the heck it is now. They were the last one hanging on. And it seems like since then, stocks have been a little bit rocky. Now, again, we got yields coming up, causing stocks to come down overall. These bond yields coming up. So we can see, if I zoom in a bit here, stocks sold off on Wednesday, pressured by a sharp spike higher in Treasury yields as traders grew worried that a new U.S. budget bill could put even more stress on the country's already large deficit, which we all know the U.S. loves deficits, right? Loves deficits. And get this, the 30-year Treasury bond yield last traded around 5.08%, the highest level going back to October 2023. So the 30-year, guys, hit about a 1.5-year high today. And the benchmark 10-year Treasury note yield traded at 4.59%, which we all know the 10 years been creeping up as well. And long-dated bonds sold off as traders worried a new budget bill would worsen the U.S. deficit, like I said before, and the measure is expected to pass as lawmakers reach a compromise on state and local tax deductions as investors head into Speaker Mike Johnson's Memorial Day deadline. Yields spiked even higher after a poor afternoon auction for 20-year debt, which that is really where we saw the big dump off in stocks, right? So let me say that again. Yields spiked even higher after a poor afternoon auction for 20-year debt, raising fears investors may be losing their appetite for funding America's deficits. Yeah, I mean, we've seen China, they're dumping American treasuries. A bunch of other countries are as well. So there is pressure here, selling pressure on these treasuries, right? And now we're seeing the afternoon auction today for 20-year debt went not so great, not as much demand as once thought for these bonds. So, on one side you have China, some other governments dumping U.S. bonds. Then you have on the other side demand for these U.S. bonds, which I guess goes hand in hand with China dumping them. Demand's going down. It's not as hot as it once was. So now we're seeing fears amongst investors like, oh my God, there's not as much demand for U.S. debt right now. They don't want to fund America's deficits, as this article put it. And now we're seeing this, the yield come higher, right? Again, the 30-year yield, I think, hit a high, 18-month high pretty much. Interesting, guys, interesting. And the article here says the questions now is from a fiscal perspective, what will the tax bill look like? And will it undo all of the recent fiscal frugality by simply raising the debt level at a slower rate of pace? Right? That's what it says here. So I think that's why the 10-year yield is moving higher, because investors are worried that we're really not doing anything to slow the pace of inflation and to reduce the debt. That's what Sam Stovall said. He's the CFRA Research Chief Investment Strategist. He also said, now it seems as if there is a greater chance that the tax bill will pass, and that could end up simply continuing to raise the overall debt level. Let's see what else people said. Treasury yields, I mean, they've been spiking. This is not like groundbreaking news just today. I mean, Treasury yields had spiked last month as worries over Trump's tariffs dented confidence in the safe haven status of U.S. debt. The 10-year in April swung from below 3.9% to more than 4.5% in just days. Think about that. That's a massive move in the bond market, guys. And yields eased from those levels after Trump announced delays on when the levies, I always screw that term up, would take effect. So, yeah, in other words, it looks like bond yields keep on creeping up. They have been the last month, then they kind of cooled off a bit. Now we're seeing a spike again. So that's kind of what we're dealing with, guys. This is what is causing a bit of anxiety, unease, if you will, in the U.S. stock market today. And, well, we saw a pretty big dump off across the board on Palantir, the U.S. stock market, and we'll see how this ends up playing out heading into tomorrow and as we're slowly now wrapping up the week. So let me know your thoughts in the comments, guys. Hit the like button. Don't forget to subscribe. Do all that good stuff. Hit the like button. Drop a comment, like I said. And join the free email stock newsletter. And check out my Patreon for my portfolio updates. All of those are down below. And with that being said, cheers. I'll catch you in the next video.